HDFC NIFTY Small Cap 250 Index Fund. Will this NFO help you build wealth in the long run, or will it disrupt your wealth building process? Let us see in detail in this video. Hi, welcome to holisticinvestment.in. We help individual investors like you to take the right financial and investment decisions and to reach your financial goals faster and smarter. Now, what is HDFC NIFTY Small Cap 250 Index Fund? It's a mutual fund that invests in the NIFTY Small Cap 250 Index. In short, it's an open-ended equity scheme replicating or tracking the NIFTY Small Cap 250 Index. This fund is open for purchase from 6th April 2023 to 18th April 2023. Now let's look at the key features of this NFO. What type of fund this is? It's an open-ended type of fund. It has NIFTY Small Cap 250 Index TRI as its benchmark index. And also it has plans for growth, and there are no entry and exit load charged for this NFO fund. And the minimum application amount you need to start investing in this fund is just 100 rupees. And the risk meter in this fund is very high. Also, the fund managers of this fund is Mr. Nirman Morhakia and Mr. Arun Agarwal. The primary objective of this fund is to achieve a return equivalent to the NIFTY Small Cap 250 Index by investing in stocks of companies comprising the NIFTY Small Cap 250 Index, which may be subject to tracking error. The key facts to know about this fund is that NIFTY Small Cap 250 represents the top companies, meaning the companies that start from the 251st to the 500 companies selected based on the average daily turnover from the top companies, which are selected based on the full market capitalization in the NIFTY Small Cap 250 Index. So the primary objective of this NIFTY Small Cap 250 Index is to capture the movement of the small cap segment in the market. And this index is computed using the free float market capitalization method. The sector representation of this NFO fund is shown to you on the screen, which you can pause and read. From the screen, you can see it represents various sectors from financial services, capital goods, healthcare to textiles, power, porous materials and all. The topmost representation allocation is given to the financial services by a weightage of 19.83%, and the least allocation is given to the diversified company sector by a weightage of 0.43%. Next, the top 10 constituents by the weightage given to the company is the KPIT Technologies Limited, Carborundum Universal Limited, IDFC Limited, PVR Limited, Redington Limited, Indian Energy Exchange Limited, KEI Industries Limited, LG Equipments Limited, Radico Khaitan Limited, City Union Bank Limited. The first company is the KPIT Technologies Limited by a weightage of 1.73%, and the 10th company in this list is the City Union Bank Limited by a weightage of 1.06%. The total returns as on 31st Jan 2023 can be seen from the table shown to you on screen. The quarterly to date is negative 7.18%, and yearly to date is a negative 7.18%, and in 1 year it has produced a total return of negative 6.03 return. Plus in the past 5 years it has produced a return of 8.07% return, and since inception it has produced a total return of 14.23% return. So now let us look at what are the advantages you might get by investing in the HDFC NIFTY Small Cap 250 Index Fund. For one, it has a diversified portfolio with investments in stocks from various sectors, and it will be suitable for aggressive investors looking for small cap exposure, because small cap exposure might be needed for aggressive investors who are looking to take risk, because small cap stocks usually are more volatile and not stable that much compared to large cap stocks. Also, this fund is totally free from fund manager bias, and as we can see from the analysis of the total returns table, we can see that the long-term investment in this index fund have got potential to give you capital appreciation compared to short-term returns. Also, as it is managed passively, it is expected to have a lower expense ratio compared to actively managed mutual fund scheme. Now let's look at the disadvantage you might get by investing in this fund. For one, this is not suitable for a conservative investor, as I have mentioned before, because it invests in small cap companies which has less stability and more volatility, which might not be suitable to you if you are a conservative investor and you're not willing to take any risk. Also, as an index fund, this may underperform its index due to certain factors, because as much as the fund manager tries to replicate the index, they may not be able to perfectly replicate the index due to certain factors involved. So this fund will not be able to deliver market beating returns. Also, based on the market outlook, the fund cannot change the allocation dynamically. As it's an index fund and the allocation are all preset, predefined, we cannot change the allocation of this fund dynamically on what is happening on the market. Like if large cap stocks or more favorable in the market, we cannot change our allocation to that dynamically like that, because it's a small cap 250 index fund. So as it's trying to replicate the fund, we cannot change the allocation dynamically like that. Also, there is no analysis of the underlying stocks nor any research of the company in which they want to invest is available to our investors. So whatever risk we are going to take by investing in this fund is a blind risk. We are not going to take any calculated risk, because if you take active funds in comparison, we can take calculated risk because we can analyze all the stocks and only then we will invest, because we choose the best by analyzing the stocks and the track record. But as it's not available in an index fund, we are taking a blind risk, which is a major drawback. Another major drawback is an index fund investment is a tracking error, since as I have mentioned before, it may not perfectly track the index. So as an index fund, it is not flexible and nor will it be able to take let you take any course corrective measures during the market correction period or a market crash. So these are the points you must consider before you want to, you might start thinking about investing in the HDFC NIFTY small cap 250 index fund. So finally, what are our takeaway from this analysis? Like, should we invest in this or not? It totally depends on who you are as an investor and what is your risk appetite and what are your financial goals and what is the allocation you're willing to give to this NFO fund. So if you're an aggressive investor who is not willing to invest in actively managed fund but still willing to take risk and want to invest in a passive fund, then it may be suitable for you. But if you're an investor particularly looking for a large cap or mid cap exposure as well, this fund will not be suitable for you. So long-term investments in actively managed portfolios can produce better return compared to an index fund like this one. So if you really want to invest in an index fund, there are already existing index funds similar to this with less expense ratio and less tracking error, which you can look into for investments. So investors looking for investments that can beat the market should avoid this fund for now. And if you really want some guidance on whether you need to choose this NFO fund for your portfolio or not, you can always consult with your financial planner to see whether this investment product will be suitable for you or not. If you have any doubts regarding the topic we have discussed in this video, please comment so we can get back to your queries quickly. Also, if you have any doubts regarding mutual funds or any insurance policy in general, then you can always book a complimentary financial consultation with one of our financial planners to discuss about it, and the link is in the description to book your appointment with us. And if you want to gain more knowledge regarding financial investments and personal finance in general, we also regularly conduct live webinars for which also you can register by clicking the link in the description. Also, if you like our content, please like, share and subscribe to our YouTube channel. Thank you.